It can be transferred to profit and loss account. By profit and loss account, what's the entry? Here depreciation remain constant. At the end of the life, the value of the asset becomes zero. It becomes opening balance for the next year. 1/1/2019, two balance brought down here. Commonly land, building, machinery, furniture, motor car. So that we are going to be count. Hello my dear students, I am Dr. B.S. Subramanya, called by name Dr. BSS, Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. I am going to hand Financial Accounting 1, first semester B.B.A. The chapter goes in favor of depreciation and also the unit is 4. So we come across the final account, we come across the what is called subsidiary books and 3-column cash book are already done. So we'll go by word called depreciation. Is one of the important words that come across in our accountancy is considered. I'm going to explain what do you mean by depreciation, what are the types of depreciation. So depreciation is nothing but, we'll move on, what actually mean. Depreciate, you see that it is come down here. Depreciation means gradual and continuous fall in the value of the fixed asset. If the asset value has been come down, it is called depreciation. Which are the fixed assets are commonly land, building, machinery, furniture, motor car. If the value comes down, that value we call as depreciation. It may be in percentage or difference in value. For example, if the cost of the machineries are 40,000. Today is valuing rupees 36,000. How much has come down? 4,000, which is called depreciation. What's your original value? 40,000. What is today's value? 36,000. How much has come down? 4,000 is called depreciation. Or they may ask, the cost of the machinery is 40,000. It has gone down by 20%. So 20% of 40,000 is 8,000. It becomes 32,000. They may ask like this also. So, fall down here means gradual and continuous fall in the value of the fixed asset. Commonly land, building, machinery, furniture, motor car. So that we are going to be count. So, now there are two types of depreciation. One is original cost method or straight line method. First word is original cost method or straight line method. Number 2, diminishing balance method or reducing balance method. So there are two types of, what is depreciation? Continuous, gradual fall in the value of the fixed asset. There are two types of depreciation. One is straight line method, another is reducing balance method. Under straight line method, depreciation remain constant. First year 6,000. Second year also 6,000, third year also 6,000. So regarding the reducing balance method, no, if you have got a worth of rupees 40,000 value of the asset, 30,000, depreciation is 10%, that is 3,000, balance is 27,000. On 27,000, 10%, 2,700. It goes like this for diminishing balance method. Under fixed method, no, first year how much? 3,000, second year also 3,000, third year also 3,000. Depends upon the life of the asset. Commonly we say how you calculate depreciation on the original cost method. Cost of the asset minus scrap value divided by life of the asset. I am going to show what is the formula you are going to use. So which are the two methods are? One is original cost method or straight line method where the depreciation remain constant. Second one, diminishing balance method or reducing balance method where the depreciation goes on changing. Here at the end of the life, here no, when you charging the depreciation, at the end of the life, the value of the asset becomes zero under original cost method. Whereas in diminishing balance method, at the end of the life, the value of the asset will not become zero. So I will repeat the sentence. So there are two methods of depreciation. One is called original cost method or straight line method. Number 2 is diminishing balance method or reducing balance method. Under original cost method or straight line method, depreciation remain constant. Whatever the first year depreciation, second year also same, third year also same, fourth year also same, remains the same. Depends upon the life of the asset. That's why generally we say Depreciation is equal to cost of the asset minus scrap value divided by the life of the asset. Regarding the reducing balance method, first 40,000, 4,000, balance 36,000, on 36,000, 3,600, balance is 32,400. It goes like the diminishing balance method. So under fixed installment method, depreciation remain constant. Under reducing balance method, depreciation does not remain constant. We'll move on. Under this method, straight line method, under this method, depreciation remain constant throughout the life of the asset. At the end of its life, the value of the asset becomes zero. Here, depreciation remain constant. At the end of the life, the value of the asset becomes zero. Then, common formula we apply. Depreciation is equal to cost of the asset minus scrap value means realization value divided by life of the asset. What is the formula? Cost of the asset minus scrap value divided by life of the asset. This is a common formula you are going to use. Then, under diminishing balance method, under this method, depreciation does not remain constant. This is the word. Does not remain constant. It changes from year to year. At the end of the life, the value of the asset will not become zero. Where in straight line method, the value of the asset becomes zero. In the case of straight line diminishing balance method, the value of the asset will not become zero. Here in the straight line method, depreciation remain constant, whereas in the diminishing balance method, depreciation does not remain the constant. What is depreciation? Fall in the value, gradual fall in the uncontinuous fall in the value of the asset is called depreciation. There are two types of depreciation. One is called straight line method. Number two is called reducing balance method. What is straight line method? Under this method, depreciation remain constant throughout the life. At the end of the life, the value of the asset becomes zero. Under reducing balance method, the depreciation does not remain constant. The value of the asset will not become zero. It goes on changing. Under diminishing balance method, depreciation goes on changing from year to year, whereas in the original cost method, depreciation remain constant. Then, we move on. A small problem going to be explained. A company purchased a machinery on 1/1/2018 for rupees 60,000. When the machinery is purchased, what's the general entry? Machinery account data to bank account or machinery account data to cash account. Rupees 60,000. The rate of depreciation is 10% per annum. Prepare machinery and depreciation account for 3 years. Very, very simple problem going to be explained now. So, what's the cost of the machinery value? 60,000. What's the rate of depreciation? 10%. How many years he has to prepare? For 3 years. I will show how we have prepared and I am going to be explain that. See that this is a machinery account. You put here debit, credit. All the accounts followed with debit and credit. First entry, machinery account debtor to bank account. Which day it was purchased? 1/1/2018. What's the entry? Machinery account debtor to bank account or to cash account. You can write. What's the value? 60,000 is the value. What's the at the end of the year, the value has been come down. It has gone depreciation 10%. 10% of 60,000 is 6,000. It has come down by how much money? 6,000. What's the balance left over is 54,000. You started with 60,000. How much depreciation is charged? 6,000. What's the balance left over? 54,000 at the end of the year. This is a closing balance for which year? 2018. It become opening balance for the next year. 1/1/2019. To balance brought down here. To balance brought down. How much? 54,000. I told you depreciation remain constant. Second year also 6,000. Don't charge on 54,000. What's your depreciation amount? 6,000. Second year also it will come 6,000. By depreciation 6,000, the balance is 48,000. 54 minus 6 is 48,000. That's a closing balance of the second year. In the third year, you brought down 48,000 here. 2 balance brought down 48,000. Depreciation remain constant. In the third year also it is 6,000. How much left over? 42,000 close with. That is the opening balance for the next year. I will repeat. You prepare the what's called. You purchase the machinery worth of rupees 60,000. On which date? 1/1/2018. What's the entry? Machinery account data to bank. What's the entry? Machinery account data to bank account. You pass the entry here. Machinery account data to bank account 60,000. What's the rate of depreciation? 10%. 10% of 60,000 is 6,000. What's the entry? Depreciation account data to machinery account. You must be careful to pass this entry this time. How to pass the entry now? Machinery account data to bank account. If you come this side now, depreciation account data to, it has come down to the extent of 6,000. What's the value? 60,000. On 60,000, you charge 10%. It comes to 6,000. On 60,000, 10% is 6,000. By depreciation, 6,000. What's the balance left over? 54,000. Closing balance of which year? 2018. That becomes the opening balance for the next year. 1/1/2019. How much? 54,000. Depreciation remain constant. For the first year depreciation, 6,000. Second year also 6,000. How much balance is there? 48,000. That becomes the opening balance for the third year. So here also depreciation remain constant. At the end of the third year, the value is 42,000. Start with 60,000. At the end of the third year, the value becomes 42,000. So 18,000 has gone depreciation for 3 years are considered. I think you can follow. Easy now. To bank, cost of the machinery by depreciation 6,000, by balance 54,000, brought down 54,000, depreciation remain constant 6,000, balance is 48,000, brought down 48,000, by depreciation 6,000, balance is 42,000. That's the opening balance for the next year. So the problem asks even prepare the depreciation account. Depreciation will come profit and loss account, debit side as a loss, assumed as a loss here. Here, formula, depreciation, we can put it here, debit, here credit. What's the entry? Depreciation account data to machinery account. Depreciation is charged on what? We say depreciation is charged on what? On machinery. What's the entry? Depreciation account data to machinery account. It can be transferred to profit and loss account. By profit and loss account. What's the entry? Profit and loss account data to machinery account. We charge 6,000 to profit and loss account. The value of the machinery comes down 6,000 in the first year, we mean to say. In the second year also, to machinery, how much we charge? 6,000. Transfer to profit and loss account, 6,000. Every year you are charging 6,000, the value will become down. Third year, to machinery, how much? 6,000. By profit and loss account, 6,000. Every year you are charging how much money? 6,000, 6,000, 6,000. You are going to charge till the end of the life. So that you got 60,000, no? Every year charge 6,000, it has got a life of 10 years, no? You can charge 6,000, that is why. Here got, see the word? You got cost of acquisition is 60,000. Every year addition is 6,000. Cancel the 0, 610. How many years? 10 years it is going to leave. Every year you are charging 6,000, 6,000. At the end of the 10th year, the value of the asset becomes the 0. If you sold, it is called as a scrap value. Realization of waste is called scrap, we say. At the end of the 10th year, we can sold the machinery as a scrap. So I think you understand. Depreciation account data to machinery account. Depreciation is charged on machinery. It has been transferred to profit and loss account. By profit and loss account. Every year how much you charging? 6,000, 6,000, 6,000. Had a life of how many years? 10 years. Till 10 years you are going to charge how much money? 6,000 in P&L account, 6,000 in profit and loss account, 6,000 in profit. Every year charging 6,000. For how many years you are going to charge? 10 years. I think you have followed this. We'll move on to next problem now. A firm purchased a machinery for rupees 80,000 on 1/1/2016. Depreciation at 10% per annum under original cost method. Depreciation remain constant. Prepare machinery and depreciation account for 3 years, he is going to ask. So general question I am going to be solving now, so that student can understand easily what is actually depreciation. Easy chapter now, so that we can go very slowly. You can charge about 10 marks question will come. Very, very easy question you are going to solve. We'll start now. First, machinery account. What is the cost of the machinery purchase? 80,000. Which date it was purchased? 1/1/2016. Right here. 1/1/2016 to bank account. What is the cost of the machinery? See that? 80,000. The cost is 80,000. To bank account, 80,000. End of the year, 31st December 2016 by depreciation. So 10% of 80,000 is 8,000. 10% of 80,000 is 8,000. Bring out the difference. It is 72,000. At the end of the year, the balance is 72,000. That is on 31st December 2016 by balance carried down. What's your opening value? 80,000. What's the entry? Machinery account debtor. Machinery account debtor to bank account. You purchase the machine at what rate? 80,000. Come back here. By depreciation, 10% of 80,000 is 8,000. Difference is 72,000. End of the year. Brought down to next year. 1/1/2017. To balance brought down. 72,000. See that? End of the year, how much is there? 72,000. To balance brought down, how much? 72,000. Depreciation remain constant. Here, 31st December 2017 by balance carried down by depreciation. Depreciation remain constant. What's your first year depreciation? 8,000. Second year also 8,000 here. Bring out the difference. It is 64,000. End of the second year, the balance is 64,000 by balance carried down. End of the year, how much the value? 64,000. How many years over? 2 years over. Brought down to third year. 1/1/2018. To balance brought down. What's the value? 64,000. Depreciation remain constant. Here, 31st December 2018 by depreciation. Depreciation remain constant, 8,000. So every year, how much you charge? 8,000, 8,000. Bring out the difference. 64,000. 64,000. It is 56,000. End of the year, 31st December 2018, same date, by balance carried down 56,000. End of the year, 56,000. Next year brought down will be 1/1/2019. To balance brought down. End of the year, how much? 56,000. Brought down to next year. So, to bank account 80,000 by depreciation 8,000, balance is 72,000, brought down 72,000, by depreciation 8,000, difference is 64,000, to balance brought down 64,000, by depreciation 8,000, difference is 56,000, end of the third year, brought down to fourth year. I think easy now. Every year, depreciation remain constant. We'll move on to depreciation. Here, depreciation account. So, depreciation is charged on which date? What is the first year depreciation here? 16. This is 31st December 2016 to machinery. How much you charge? 8,000. Transfer to profit and loss account 31st December 2016 by profit and loss account 8,000. First year over. So, what's the entry? Depreciation account data to machinery account. How much money? 8,000. Transfer to profit and loss account. First year over. Second year. To machinery. 8,000. Transfer to profit and loss account. 8,000. Tally. Two years over. In the third year, to machinery, 8,000. Transfer to profit and loss account. 8,000. So how to charge? To machinery 8,000, by profit and loss account 8,000 first year, to machinery 8,000, by profit and loss account 8,000, third year also to machinery 8,000, by profit and loss account 8,000. It goes on charging one by one. I think you understood this easy now. We'll move on to next problem now. See that a company purchased a machinery for ₹1 lakh. On 1/1/2016, depreciation at 10% per annum under original cost method, prepare machinery and depreciation account for 3 years. What is the cost of the machinery? 1 lakh. It is going to remain for 3 years. We'll work out slowly. Machinery account, debit, credit. What is the cost of the machinery? 1 lakh. Which day it was purchased? 1/1/2016. 1/1/2016 to bank account. What is the cost of the machinery? 1 lakh. You purchased the machinery for ₹1 lakh. Machinery account data to bank account, how much? 1 lakh. 31st December 2016, what's the rate of depreciation? 10%. By depreciation, 10% of 1 lakh is 10,000. Bring out the reference. 1 lakh. 1 lakh. Difference is 90,000. This is 31st December 2016, same date, by balance carried down at the end of the year. brought down to next year, 1/1/2017, 2 balance brought down. What's the value? 90,000. Your balance is 90,000. Depreciation remain constant. 31st December 2017 by depreciation remain constant by depreciation 10,000. Bring out the reference 90,000. Difference is 80,000. Same date by balance carried down is 80,000. Next, 1/1/2018, 2 balance brought down. What's the value? 80,000. Depreciation remain constant. 31st December 2018 by depreciation remain constant. First year 10,000, third year also 10,000. Bring out the difference 80,000. 10,000 gone means 70,000. What's the original value? 1 lakh. 10,000 is 90,000. 90,000 minus 10,000 is 80,000. 80,000 minus 10,000 is 70,000. By balance carried down 70,000. Brought down to last year 1/1/2019. 2 balance brought down. Value is 70. So every year we are charging how much? 10,000. The value becomes 1 lakh. 10,000 is 90,000. 90,000 minus 10,000 is 80,000. 80,000 minus 10 is 70,000. At the end of the third year, it will be valued only 70,000. So 30,000 is charged on 1 lakh. It becomes 70,000 now. Now, you are charging the depreciation. Depreciation on what? Depreciation on machinery. 31st December 2016 to machinery. Charge how much? 10,000. 10,000 rupees has been charged on machinery, transferred to profit and loss account by profit and loss account 10,000. First year over. Second year, 31st December 2017 to machinery. Every year how much charge? 10,000 will be charged to machinery 10,000. So it will be transferred to profit and loss account. $10,000. Third year, 31st December 2018 to machinery. How much charge? 10,000. Transfer to profit and loss account. So we'll explain once again. Two machinery 10,000, transfer to P&L account 10,000 first year, second year also 10,000, third year also 10,000. So depreciation remain constant. So we have solved two. I have shown every four problems I have shown. All the problem is one and the same. So what is depreciation? We'll come back. I will explain once again. Depreciation means gradual, continuous fall in the value of fixed asset. Which are the fixed assets are land, building, machinery, furniture, motor car. All the fixed assets will be come down. So here we see the picture now. It is coming down like this, means fall in the value gradually. It is fall in the value of the asset. There are two types of depreciation. One is called straight line method or original cost method. Number two, reducing balance method, or we say that diminishing balance method. In the original cost method, depreciation remains constant throughout the life. At the end of the life, the value of the asset becomes zero. Under diminishing balance method, depreciation does not remain constant. It goes on changing from year to year. At the end of the life, the value of the asset will not become zero. Okay, that's what I have given the point. Depreciation is equal to cost of the asset minus scrap value, means realization value, divided by life of the asset. Here, does not remain constant. So, first problem we have solved is 60,000. I will explain. Two bank accounts 60,000. By depreciation 6,000. 6,000 remain constant. Second year you brought down 54,000. 6,000 brought down 48,000. 6,000 is 42,000. Every year depreciation remain constant. It has been charged to profit and loss account. Depreciation account, data to machinery. Depreciation on what? Depreciation on land, depreciation on machinery, depreciation on furniture. You have to mention on machinery how much money first year? 6,000. Charge to profit and loss account. Every year how much you are charging? 6,000, 6,000, 6,000. Easy now. Two machinery by profit and loss account. Two machinery by profit and loss account. I think we have solved the problem, and it's very, very easy. This will ask you for 10 marks. In the next session, we are going to discuss if the asset have been sold, maybe higher value or the lower value, how to calculate the depreciation. In the next session, we'll discuss definitely question paper problem. We'll meet with the question paper problem. Till then, goodbye. Meet in the next class.